Hi, I'm Joe Rodriguez, Senior Managing Director of Financial Services at Cloudera. Welcome to this session of Optimize Innovation, Efficiency, and Compliance with a Unified Data Platform. This is an overview of Cloudera, the enterprise data cloud company. Financial services is Cloudera's largest industry vertical. We have approximately 425 global financial services customers, which consists of 82 out of 100 of the largest global banks, of which we have 27 of which are globally systemic banks, 4 out of the 5 top stock exchanges, 8 out of the 10 top wealth management companies, and all 4 of the top credit card networks. So as you can see, most financial services institutions utilize Cloudera for data analytics and machine learning. We also have over 20 central banks and a dozen or so financial regulators. So it's an incredible footprint, which gives Cloudera lots of insights into the many innovations that our customers are coming up with. There are several disruptive forces affecting the financial services industry at the moment. So regulation continues to evolve and increase. Customers have grown more independent and demanding. They want the ability to perform many functions on their own and to be able to do them on their mobile devices. There is increased competitive pressure from non-traditional sources such as fintech banks and payment processors and big tech firms as well. Criminals, unfortunately, have grown increasingly more sophisticated, making financial crime fighting ever-changing to keep up with the bad guys. The way we manage risk is also evolving to meet the requirements of regulators for more stress testing and to take into account an increased amount of historical data as well as untraditional sources of data in our risk models. Finally, technology continues to evolve exponentially, giving financial services institutions more tools than ever before to accomplish their digital transformation. And COVID-19 has in many ways accelerated many of these disruptive forces, and particularly the evolution of the customer experience is changing and is changing ways in which we model risk, necessitating alternative sources of data and more historical data for those models. The pandemic has also seen an increase in financial crime, with criminals becoming a lot more sophisticated, requiring our customers to enhance their machine learning models to better detect fraudulent activity. So let's talk about the Cloudera Data Platform, or CDP. CDP is an end-to-end data platform that lets you use data from any source, both structured and unstructured, real-time and batch. It provides all the tools or experiences necessary for the entire data lifecycle. It works with your on-prem data as well as on the cloud, whether it's a private cloud, a public cloud, or a hybrid cloud or multi-cloud. Cloudera also provides security and governance with SDX to simplify data protection, sharing, and compliance. And Cloudera is open and extensible to support more use cases faster at a lower cost with no vendor lock-in. A unified lifecycle is required to use, manage, and secure data effectively. We've learned from our customers that every business use case needs multiple data and analytic functions to process diverse enterprise data. Getting value from data is complex because the data is complex, distributed, and rapidly changing, especially with more and more unstructured and alternative data, and more data coming from IoT devices or connected data. This diagram shows how the data lifecycle fits into financial services with structured, unstructured, connected data or IoTs, and transactional data. all needing to be processed rapidly to drive useful insights to support the use cases the business needs to implement. So multi-dimensional challenges need holistic solutions. Let me briefly highlight four use cases for your four use case categories around customer experience, financial crime prevention, risk management, and compliance. So let's talk about the customer experience first. As customers' expectations continue to evolve, enhancing the customer experience requires expanding the data sources and analytics used to better predict and anticipate customer needs. With CDP, financial services organizations can collect data from multiple sources, both structured and unstructured, transactional and streaming, enrich and cleanse the data to make it easier to create and execute end-to-end data pipelines that can then be analyzed and reported on. This is done while maintaining strict data security governance and audit trails across on-premise and hybrid cloud environments. Now let's talk about financial crime. So CDP enhances financial crime solutions to be holistic by eliminating data gaps between siloed solutions with an enterprise data approach, advanced data analytics, and machine learning. By deploying an enterprise-wide data platform, you reduce siloed divisions between business, risk, and crime teams and enable better collaboration. Through industrialized machine learning, you tighten the loop between detection and fraud patterns. Cloudera provides the data platform on which best-of-breed applications can run and leverage integrated machine learning on petabytes of data. Cloudera extends rather than replaces your existing fraud modeling applications such as Oracle, SAS, Actimize, to name a few, and integrates with an enterprise data hub to scale the data, increase speed, add flexibility, and improve efficacy of your entire fraud system. It also centralizes the fraud workload on data that can be used for other use cases in applications like enhanced KYC and Customer 360. Let's talk a little bit about risk management. So risk management is our largest application area in the banking sector with over 40,000 nodes in production. I highlight these three areas of risk that we think will become key focus areas for global banking institutions over the next 3 years. So the first is contagion risk. And by this, I don't mean the current global pandemic crisis, though that should fall within this topic. What I want to highlight is financial contagion risk. This is a growing concern among all regulators and chief risk officers. This is driven by markets becoming more interconnected, coupled with new sources of risk. While cloud concentration risk is one example, there are many others. For example, CCPs or central counterparties that were created to address gaps in the OTC markets in 2008 have become a new source of concern. Another example is Brexit, which can have significant spillover effects, not only on financial markets and trade, but with respect to hidden supply chain effects that can significantly impact a bank's SME lending portfolio. Risk capital. This area is regulatory driven, and the forthcoming global market risk capital regulation call for FRTB or the Fundamental Review of the Trading Book. I'll talk about this challenge in more detail in the next slide. And also stress testing will undergo significant transformation in the next 3 years. While globally stress testing has become a regulatory exercise, Internal banks are starting to look beyond the limited static macroeconomic based scenarios that look at exposures in isolation to a dynamic stress testing approach that take into account market and competitive feedback effects. This new approach requires advanced simulation capabilities. This is also ideally suited to take advantage of the hybrid cloud containerized architecture that supports massively scalable bursting and compute capabilities. And lastly, climate risk, which will have a substantial impact on financial markets and in particular capital adequacy planning. This is a space that's still evolving, but will impact asset valuations and risk models, which, like FRTB, will have a requirement for more historical data, new sources of data, and more compute to run valuation and risk models. FRTB, or the Fundamental Review of the Trading Book, is part of the new global market risk capital requirements, which will come into force on January 1st, 2023. It addresses the shortcomings in risk management from the 2008 financial crisis by taking into account the trading book, and will shift how risk is measured from using VAR to expected shortfalls. So VAR, or value at risk, has weaknesses that did not address the risk associated with the trading book, such as interest rates, stock prices, etc. And FRTB will add rigor to models to measure capital requirements, whether using a standardized approach model or an internally developed model. The impact on the market could be substantial. Research from McKinsey, as well as the Basel Committee on Banking, highlights some of those potential impacts. The top 10 banks' average ROE might fall by 34% because of the increased capital requirements. Banks could require an additional $4.5 billion in additional capital reserves due to this new approach in FRTB. And compared with the Basel 2.5 framework, a median increase of 16% and a weighted average increase of 22% in market risk capital requirements. We reviewed the impact with some of our customers to see what they thought in terms of what the estimate is for their storage and compute requirements. And what they came back to us with was that on average, they determined that their storage requirements would increase by 20 times, and their compute requirements would need to scale by 30 times. So let's talk about some of the financial services use cases that Cloudera is involved in. So our financial services customers use Cloudera for a number of use cases, in particular to improve the customer experience, comply with many regulations, manage risk, and helping prevent financial crime, and to drive operational efficiency and streamline compliance and regulation. Customer 360 use cases are an area where most of our customers are investing, and as they seek to both retain customers as well as increase their share of their wallet. Excuse me. Regulatory compliance continues to evolve, improve, and expand as well. And financial crime, as I mentioned earlier, has become much more sophisticated and continues to evolve. This is another area where our customers are investing heavily to improve fraud detection, cyber attack prevention, and with the use of machine learning models. Excuse me. Risk management is, as well as finance, has been significantly evolving and improving with the ability to use new inputs from non-traditional sources and machine learning, and has seen significant investment from clients as well. And we see our clients continue to invest in advanced analytics, emerging technologies, and IT modernization as a way to improve risk management, achieve operational efficiencies, improve agility, and lower cost. Next, let's talk about the hybrid multi-cloud considerations. So why do you need an enterprise data strategy in the first place? So you can focus on data rather than the cloud. Data needs to be treated as a strategic asset. Focus on data to mitigate risk by focusing on data storage, management, and protection. Deliver security and governance, limiting fraud, theft, and increasing compliance. Ensure integrity and accuracy, making data known, discoverable, available, trusted, and compliant. Support business objectives, gain insights quickly. Most importantly, be able to answer questions like, what data do you have? Where does it reside? How do you govern and secure it? How do you access it? How do you derive value from it? So here are the key considerations for coming up with a hybrid cloud strategy as it concerns data. We advise clients to start with a business strategy, understand what business outcomes they're striving for and why. Then determine your data strategy based on those business outcomes. What data you're going to need, who will need to access it, and how you will get it. Then finally determine what your hybrid cloud strategy will be. We often see firms rush to develop a cloud strategy before fully understanding their business and data strategy, which can result in some costly issues down the road. This slide represents the evolution of architecture. So over the last 30 years, so since the 90s, we saw the start of the era of open source software, which is significantly evolved and is now much more mainstream. At the time, data was mostly on-prem hardware. In the 2000s, we saw the start of virtualization of environments, which led to the cloud revolution starting in the 2010s to today. At the same time, we saw the start of the big data revolution, which also continues today. In the late 2010s, to today, we see containerization evolve, allowing us to separate data from compute. The evolution of the technology including cloud, enables us to use big data in new and powerful ways. Previously, the costs were much more prohibitive. This is also ideally suited to take advantage of the hybrid cloud containerized architecture that supports massively scalable bursting compute capabilities. This is what drives data-driven, large-scale, elastic architectures. If you add both vectors of IT architecture evolution together and multiply them by the amplifiers we talked about, you arrive at a new category, and that's what we refer to as the rise of the enterprise data cloud. So summing up, why Cloudera? And we are based on our 4 pillars. So other vendors and our 4 pillars of hybrid cloud and on-premise data lifecycle secured and governed through SDS and open source. So summing up why Cloudera on those 4 pillars. Other vendors lack multi-cloud or data center, hybrid and multiple public cloud, max choice of flexibility, move data and apps without rewriting and retaining separate data management from infrastructure strategy, manage all environments from a single pane of glass. Other vendors lack multifunction or lack integration between functions. Deploy one platform to address current and future workload needs. Connect disparate workloads to develop edge to AI apps on one platform. No one else comes close to SDX, security and governance across any cloud and data center. All functions to secure and keep secure are done automatically. With the ability to manage data security and governance centrally, automate app security at all layers, shorten time to value with enterprise productivity tools. No other vendor is proven 100% open source for all its functionality as Cloudera is, which reduces vendor lock-in, and with 100% open source platform, extend enterprise data cloud architecture with third-party apps. At Cloudera, we are very fortunate. Not only have we nearly all the large global banks as our customers, we are equally fortunate to have a very significant footprint with central banks and regulators. This gives us a fairly unique view into key trends on the regulatory side, which you'll see. Oops, sorry. One of the key concerns that regulators are focused on around operational risk is associated with third-party outsourcing, particularly with a focus on cloud computing. As illustrated here, this comes from global European and US regulators. A focal point of the concern is around public cloud service providers, and a concern that the big three CSPs market share, which was about 68% in 2019, results in cloud concentration risk. This chart shows the global public cloud market share as of the end of 2019. It continues to be heavily concentrated in a small number of providers, as you can see. So, Amazon, Microsoft, Alibaba, Google, Tencent, and then everyone else, but mostly focus on the first two. So here's a quote that I like, that I'll use with you as well. We are moving towards a world where there is a highly regulated industry, being financial services, that is running on a non-regulated third-party infrastructure. And that quote came from a CTO at one of the big banks that wished to remain anonymous. So let's take a specific example of data in financial services. The Bank of England on January 17, 2021, published some high-level numbers based upon the 30 largest banks and 27 insurers operating in the UK. As you can see in this chart, there is a high degree of concentration on just two vendors, AWS and Microsoft Azure. But take note, they mention in this publication that they will use the results of the survey to inform and adjust our supervisory approach to cloud oversight. So this is something that they're definitely focused on. So what is cloud concentration risk? Let me start by highlighting a selection from key regulator concerns around cloud computing and how the hybrid cloud platform mitigates or eliminates many of these. So one of their concerns is lack of transparency. The hybrid cloud foundation is containerized within CDP, which allows our customers to manage and move data and applications across any platform from a single control pane. Another concern is cyber attacks can have a wide impact. A recent Fed simulation based upon FedWire data shows that a cyber attack on a small group of small, medium, and large banks will impact average 60% of the entire U.S. payment system. Lack of unified security and governance layer. So the Cloudera Shared Data Experience, or SDX, provides a single data security and data governance layer across all platforms. You'll hear the detail of this later in this presentation. Vendor lock-in, a major regulatory and operational concern. We fully prevent CSP lock-in with our hybrid cloud platform. And then cloud concentration risk. There are two types of cloud concentration risks. Firm-specific risk, the lack of mobility of data that and applications create an operational risk. The hybrid cloud allows for a full management and mobility of data and applications across all platforms. And systemic risk, which applies to having critical mass of critical market functions, such as payments in particular, or clearing, that reside on a single CSP. This can result in a significant contagion effect across the market and into the banking system. This type of risk can only be addressed by the regulator, not by any single banking firm. From a personal perspective, the movement of the banking sector to a true hybrid cloud platform helps the entire financial services industry reduce cloud concentration risk. So this Venn diagram shows how CDP can reduce several regulatory concerns around cloud concentration risk, which I'll summarize in the next slide. So for financial services firms, CDP eliminates cloud provider lock-in. CDX maintains unified data security and governance across all environments. And a containerized architecture enables portability and separation of compute and storage. And it reduces regulatory concerns about the lack of unified data security and governance, cyber attack resiliency, vendor lock-in, and operational resiliency. This is similar in terms of the benefits for regulators. It eliminates their portability concerns. It enables machine learning, AI, and simulation capabilities to help identify systemic cloud concentration risk trigger points, and reduces the concerns that they have about the lack of unified data security and governance. For the cloud providers, it helps accelerate cloud growth and workload migrations, actually. It supports consistency across workloads and between environments. And again, it reduces key concerns about lack of unified data security and governance, cyber attacks resiliency, vendor lock-in, and operational resiliency as well. And that's it for our presentation. Thank you very much, and appreciate you being here with me and listening. Thank you.